Hey everybody, before we get going, a little word from today's sponsor, Danilec. Every shipping company in the world pays what we call the fragmentation tax. It's the time your team spends reconciling data across 5 different systems just to answer one commercial question. It's the manual cross-checking that eats your most experienced people's day. The Great Integration, the new report from Danilec and Thetius, explains exactly where that tax shows up and how leading operators are connecting what they already have to support faster, more confident decisions. Recommended listening for owners, charters, and anyone in commercial. Get your copy today at danilec.com. Thank you for listening. Don't forget to talk to our friends at Digital Ship for advertising opportunities. And now on to the podcast.
Welcome, everyone. You are listening to The Last Dinosaur, and I'm your host, Chris Aversano. This is the podcast where we explore the evolving maritime landscape and hear from the innovators leading the charge. Today's guest is Daniel Rose, co-founder of Shipergy, a technology-enabled trading business operating at the intersection of energy, logistics, and data, focusing on the marine fuel business. Daniel brings over 25 years experience across CEO and C-suite roles with a track record of building and scaling businesses in complex, high-risk environments. Most recently, he co-founded Shipergy and scaled it to over $200 million in annual revenue in just 3 years, while developing proprietary AI and data products now used by global enterprise clients. This conversation gets into what it takes to build and scale a trading business today, where technology creates real advantage, and how traditional industries are evolving under pressure from data, transparency, and changing market structure. Daniel, welcome to the podcast.
Thank you very much. Thank you for having me.
So I'd love to hear about people's backgrounds. And you are at a really cool place right now where you're bringing together a very old function in our business, bunkering, with a lot of new things. Tell us about the founding of your company, how you got there, and a little bit of where you are today. And I think this is really kind of an exciting part of an old industry.
That's right. I mean, this is definitely an old industry. Bunkering is as old as maritime itself. I've been around the sector in various roles for more than 20 years. I was formerly the CEO of LQM, and going back 5 years now, I was introduced to the venture studio at Signal. And of course, after being within bunkering for so long, I'd witnessed many inefficiencies, many things that I saw could be done a little bit better. And I was really drawn, to Signal's pedigree in the tech space. And I thought, okay, there must be something really good that we can do here. And we agreed to team up and start a company together. I was employed as an entrepreneur in residence, a job title that some of my peers in the industry still find quite amusing, within the Signal domain. And whilst I was there within Signal, we were basically working on speccing out what we felt should be the right bunkering company for the future. So it was really nice to have that sort of 10 to 12 months to get my feet on the ground, to really explore different problems, and then really hopefully start with the best possible structure of a bunkering business going forward. And that was basically how it happened. And we are about a month away from our 4th year of trading now. So that's where we are right now.
That's absolutely amazing and really interesting, because I think you kind of hit on a little bit of maybe, I don't want to say the problem, but certainly the perception in our industry and an entrepreneur in residence, where you go into a lot of other areas and parts of the world or different personas within our industry, myself included, you're like, wow, that's pretty cool. But for 90+% of the industry, they're like, oh, that's like a made up title.
Yes.
When, yeah, I get what they're saying, but that must have been a really cool experience, especially sitting with the Signal folks who also were kind of, for those that don't know, were kind of entrepreneurs in the chartering space, especially when it came to the tanker business with their platform as well. So that must have been a really interesting kind of time to be there, watching them start up and their backing, and now taking on entrepreneurs. Tell us a little bit about that experience and sitting in the office and seeing not only how they did it, but other projects that they were working on, maybe in parallel or some other completely different projects.
Sure. Well, I can't talk about Signal secret source, but it was a really interesting time, as you say. And what was actually quite interesting for me is that I came in with lots of really ambitious ideas about what we could do with tech within bunkering, right? I was like, we could build this API, we could build this SaaS product, we could do all sorts of different cool stuff. And they were actually grounding me and saying, Daniel, that all sounds super cool, but you're the domain expert in commodities and bunkering. So they pushed me more towards actually starting something which could create revenue really quickly, which I think was a very sensible take, right? And, I think it was the right decision ultimately. Additionally, during that period, I was able to do some really nice sort of research, sit with their bunker buyers, their chartering team, their operational team, and really go through the entire bunker supply chain, like each step of the process in intricate detail, and try and understand which parts of it were problems worth solving or not, right? We really, really looked at that. And then I produced this chart which sort of ranked the problems from small to large in size. And then I ranked on the other axis, what is the value of solving these problems from small to large? Okay. And that sort of informed a little bit about where we would go in terms of tech once the trading business was up and running. So it was a very nice process, very nice opportunity, and very, very grateful for that.
And I think that that's the number one kind of issue with any tech, but certainly in our industry, which is, certainly for a long time tech adverse, or let's say on the graph, we're not early adopters of tech. So when people come in and throw tech at something, it's not necessarily solving for a problem, but they're finding a problem. And I think that was one of the biggest kind of questions or problems that early days we saw in the maritime space. Not necessarily early days, but certainly recently, Daniel, you could remember this. We wanted to solve everything with blockchain because it was a cool tech, right? Because it was related to crypto. But they're really, from the blockchain point of view, it was a solution looking for a problem, as opposed to there are many problems that you don't need blockchain. And it sounds like that's the way your approach was, not necessarily to pick on blockchain, but to say, hey, what are the problems, and ranking and rating these problems in those two kind of criteria, size and value, is probably leading to where you are today with having, scaling to 200 million in 3 years.
Yeah, absolutely. I can name several problems within our sector that could be solved, but also no one's asking for them to be solved, which is another issue as well, right? So no, I agree with you. I hear what you're saying, and blockchain has never really found its footing, certainly in my space, or indeed anything adjacent to it, as far as I'm aware.
I think the one area which blockchain kind of makes sense, looking at this for a second, would be, things like bills of lading, right? And there was a big push for blockchain and bill of lading because then you own it, you control it. There was a lot of legislation, I know, in the UK, I think Singapore, France, some of these other countries really kind of took a view that you could use it for bills of lading. So it made a little bit of sense. But moving on, scaling to 200 million in 3 years, that isn't normal, whether you're a maritime business or others. Talk about, was the success all because of solving these problems, or what was kind of, without giving away, as you mentioned, the special sauce, what was some of the drivers behind that?
Yeah, so I think the, whilst it sounds like a large revenue number, and indeed it is by most measures, you have to remember that, our core operation today is buying and selling marine fuel, right? And that is a valuable commodity. And like any commodity trading business, we have a high top line because, we act as a principal to the trade. So we have a high revenue. Now, I wish we had a $200 million revenue in software only, because, that would be a much more valuable company. We would probably be a unicorn already, right? But no, it is a slightly misleading metric, I feel. But no, not to take anything away from the fact that we started from zero. We've been gradually building the company up. And, I think even at today's run rate with higher prices, we're probably looking at about $350 million revenue for this current financial year. So it's a big number. Agreed. It's taken a while to get there, but, I just want to be a little bit humble and saying it's not the key sort of metric as I would look at it.
So what do you think is the key metric that you're looking at and that you would feel comfortable in kind of sharing?
Most trading companies like ours, they would be talking about the volumes that they're doing. They'll be talking about their gross profits. Those are the sort of two main metrics, and also gross profit margins as well as a key metric within our industry.
Excellent. The question that I have, when people start these things, there's always headwinds, right? When you were looking at this early on and bunkering, there's always an issue around credit, liquidity, and counterparties. Talk a little bit about some of these sort of challenges or some of these typical questions that would get asked of any bunkering marine fuels platform, whether it's like yours or somebody hangs a shingle up after maybe they left a bigger company and they start their own. Talk a little bit about how you overcame those while trying to encourage this view of a digital platform, right? So you're two headwinds, right? New company, digital platform. How do you, when you went in and talked to folks, how did you deal with that? And what was some of the reception? Again, looking at where the last dinosaur industry, dealing with folks that, yes, they like to take risk, but risk that they have more quote unquote control over.
Yeah. So there's two parts to answer this question. The first one is to say that at the beginning of the business, we didn't try to reinvent the wheel in terms of acting as a trading company of marine fuels, right? This was a market, an industry that I knew well, that I'd operated in for quite a long time. And so we just simply started selling fuel, right? The challenge at the beginning was making sure that we had all of the credit lines that we need, that we had the liquidity in the business that we needed. Luckily, I had a good amount of lean time before we traded our first ton to get a lot of these things figured out. Some of the challenges we had at the start, were really just the fact that because we were starting from zero, we had no ERP. I remember clearly, we started, I think, in June 22. I remember packing off my family for a 3-week holiday to Italy for this main summer holiday. And I just jumped on a plane and I just flew around the world, meeting suppliers, telling them what we were doing. Monday to Friday, I was just shaking hands with suppliers all over the place. But then at weekends, instead of having the downtime that I really needed, I was just sending invoices, I was sending sales confirmations, purchase confirmations, I was syncing with our bank system to make sure that everything was moving around, right? And it was a nightmare, to be frank, to begin with. And there were moments in the early months when I was building the plane whilst I was flying it at the same time. But very quickly, we built systems, people took these things over, and it got better. Now, the second part of the answer is that, in terms of tech, we didn't deliver tech from day one. We sold fuel from day one. So we weren't alienating ourselves or trying to present ourselves as being too different from day one, right? You have to remember the bunker market is enormous. It's a $200 billion plus market, which again, to my previous comment about our revenue being not the key metric, right? We have a small market penetration in a massive market, right? So we could start relationships just by, saying, look, we can get you the fuel you need at the right prices all around the world. We spent time getting clients to trust us, and that sort of builds over time, right? You can speed that up over time. And I think as I've spoken to you today, we've probably sold to somewhere between 200 and 300 different shipping groups since we started the company. So we've been quite successful in building trust and growing on that basis.
And this business, we'll get into data and AI and everything else, but this business does rely on trust and people. And, my grandfather once said, and it was something that was, I think I interpreted different until now, is the only thing you have is your name, right? I remember he used to say that. And I think that plays a lot into what you're doing. I want to rewind just for a half a second here. And you talk about building the plane as you fly it. Looking back as you're starting up, what do you think you would do a little bit different? Would it be to try to spend more time establishing ERP? Would it be maybe hiring one or two people who maybe had a little bit more experience in the bunker industry to spread out, let's say, the things that you were doing a little bit, just to, not necessarily that you couldn't handle them, but to focus on different parts of it? What would you suggest? And again, I'm looking at this not necessarily in a bad way, but for the founders or people who are listening to the podcast that are taking the same journey.
Yeah, I think that it's not necessarily something that we got wrong, but it's something that I should have done differently, or at least at a different magnitude, was that, I wanted to grow the company quickly, right? I wanted us, as I still do, to become a, company that matters, right? That can move the needle in terms of size and scale and so on. And particularly last year, I think we put too much effort into trying to grow at all costs. And until the recent invasion of Iran, the bunker market was in a pretty poor state for quite a long time. So it probably wasn't the right time to do it in retrospect. So I think in answer to your question, I probably should have put the brakes on growth, or at least the growth at the magnitude that I was kind of expecting it, right? So yeah, that's the answer. You need to not lose sight of really what really matters in the business, and growth for growth's sake is not really the best endeavor for anyone.
And where would you have put that focus instead? Would it be shoring up your internal processes? Would it have been trying to just build out existing clients? What do you think that pivot would have?
I think that we started with something good with the people that we had at the beginning and the client trust that we had. And I think if we'd have slowed things down a bit more, we would have just made more money.
The growth for growth's sake is always something that you hear people talk about, and having to do it in a more measured and careful way. One of the things I'm kind of curious about when you were diagramming the industry itself, is it a matter of, do you still see a lot of inefficiencies in the bunkering market? Was that one of the areas that you were saying, hey, if we can make things a little bit more efficient, we could save supply chain costs or other costs along the way? Because one of the things that we're seeing now, due to the war in Iran and Hormuz being effectively shut, is that shipping is pretty efficient in terms of A to B is the most efficient way. And now we're not going A to B, we're going D to B, which is the way less efficient. Whether it's something like that or other maybe things in the process, do you see a level of efficiency that was part of your growth strategy and something that the maritime industry could do better in terms of bunker?
Yeah, so the bunker market, for all of its faults, is in many ways incredibly efficient, right? If you are a ship owner and you're not known really by anyone and you need fuel on your ship, the market will come to you before you even know it, right? They will put fuel on your ship, right? It is incredibly efficient in that way as a marketplace. And there's pros and cons to that. But there are many elements that I think are structurally problematic about the market. The main issue, and this has underlined a lot of our product development on the tech side, is that fuel that is procured for vessels is negotiated in dollars per ton, right? Companies are typically ignoring the energy content of the fuel that they're buying. Whereby if you're buying fuel in Singapore today, if you buy particularly VLSFO, there could be a 6 or 7% difference in energy content between the best and worst supplier. Now, if you think about where shipping is today in terms of being pushed into environmental regulation and so on, and you think about the CapEx expenditure that we've seen in recent years on companies, trying to retrofit sails to their vessels and so on to get that 5-6% saving or whatever it may be, or air lubrication systems and so on. And that's a great, noble pursuit. I get it. I understand it. But there are serious, and I mean serious, efficiencies to be made just by looking more closely at the energy content of the fuel that you're buying. In other adjacent commodity markets, the coal industry being a really good example, the commodity itself is traded based, and the main value driver of different grades of coal is the energy content that they contain. Why are we not doing the same within our industry? That is one huge inefficiency, and it's real low-hanging fruit for shipping companies today, as I see it. So that's one area of inefficiency that I've seen and we've really dug into as a company.
So I'd like to talk about that because that gets into kind of two big buckets of our industry. One is data, right? You need data behind that. You need data in two areas, right? One is the data around the fuel, and two is the data around the ship, and then the resulting efficiency, benefit or let's say not a benefit that you have for particular fuel, as proven out, that you have to be able to prove, whether it's an IMO regulation or whether it's in the fuel EU ETS zone, right? So that's the one bucket, is the data. The second bucket is transparency. Everybody likes to be a little bit transparent because of, they think it's a competitive advantage. Talk a little bit about, where you are in terms of the data side of things, in terms of encouraging transparency, on the platform, and how you're kind of starting to address that.
Yeah, so transparency is a double-edged sword in this industry. It really, really is. A lot of people talk about it publicly, but they're also a little bit afraid of it because transparency can often erode margins. Okay, and there have been times, particularly last year, when margins were severely depressed within our sector. Bunker suppliers, whether you're a trader or a physical supplier, were often not able to charge the margins that they needed to justify their costs and the risks that they take, and so on. So transparency, particularly around pricing, it can be a double-edged sword. So I think it needs to be managed very carefully as a facet of any business in this sector. What we've done with data and transparency is focus a lot on the fuel itself, the quality of the fuel that we procure for our clients, and particularly on the energy content, as I mentioned earlier. What we've done is we've leveraged a lot of our own data that we scrape from our own operations. We sort of scrape data from BDNs as they fly through the company, and then we've also procured a lot of additional data as well from different vendors all over the world, but again, with a focus on fuel quality. And that means that we have a huge data set. We have APIs that bring new data into us every day. The data comes in. We have automations that clean the data, homogenize the data, put it in our data lake, and then we can do things with it. And the most interesting application of that is our Energy Beacon product, where we've built using what I call boring AI, is because it's not generative AI, is using machine learning, which is a branch of AI that's been around for decades. Because we have so much data, we're able to accurately predict forward an energy ranking of suppliers in different ports around the world. So it means that the clients for Energy Beacon can actually see, okay, I'm buying bunkers in Singapore today. Who should I be giving a bit of a preference to in terms of a supplier, because we expect them to have the best energy content. And what we've layered some other layers of tech on top of that, whereby we show what different supplier choice means in terms of EU ETS impact, voyage cost impact as well. So it's the big data approach is fairly complex, but it is a well understood way of building a sophisticated model. But in terms of the front end and the message and the value that it provides to clients, it's quite simple, but also incredibly impactful. Just building on what I was saying earlier about the difference between different suppliers and their energy content. To my point about transparency being a double-edged sword earlier, in this example, I don't see anyone losing from that sort of transparency, right? It means that suppliers of fuel with the higher energy content should be able to maybe charge a bit more. It means that the buyers of fuel should be able to pay the right price for the fuel that they want to get. And if they want to pay a premium and consume less bunkers for a voyage, great. That is a perfect market as far as I'm concerned. And I don't see anyone losing out. It doesn't disintermediate traders like mine or anything like that. It just enhances the whole industry as I see it.
But I still imagine that there is a level of skepticism and kind of pushback from some people who won't embrace this, who will see this as a threat. Talk a little bit about how you handle and what happens in those encounters. Is that something you just go, well, I'm not going to bother selling my platform to this person? Or Do you give them the old, as they say here in the US, the old college try and work them over time? What's the approach, and what's the elevator pitch to people like that? I'm really curious about that, because I think, again, we joke around about the name of the podcast, The Last Dinosaur. Well, there's a little bit of truth in that, in the sense of people are slower to adopt to technology in our space.
Yeah. So I've been on a really interesting journey with product development over the last 5 years with Shipergy, and I've really learned a lot. And a few things that I've learned along the way, particularly with the Energy Beacon product, is that because we had this idea 4 or 5 years ago, and I knew back then it wasn't going to work, and I knew it wasn't going to work back then, commercially speaking, even though the concept was robust. But commercially, I wasn't expecting anyone to take it, for the following reason. When I was mapping out the supply chain, as I mentioned earlier, I interviewed the bunker buyers, and I said, well, I can probably get data that shows which suppliers have the best and worst supplier, and I might be able to build a model that predicts it. And they said, well, we don't care. Well, why do you care? You must care about the level of energy. And they said, well, Daniel, it sounds great, but my boss does not KPI me based on energy content. They KPI me based on the price of the fuel relative to a benchmark, and also if there's a screw up in terms of quality, or if there's a delay with the delivery, right? So those are the three main things that they cared about. And that was a very important lesson, because okay, if I build this now, no one's going to pay for it, right? Because it doesn't fit one of those three pain points that the buyer had. But I also knew that, shipping was being pushed into the environmental regulatory matrix, and I knew that it would become valuable at some point. So we sort of parked it and sort of were building it slowly in the background whilst growing the trading operation. What I have found is that you need to go into client meetings with proof, right? You need proof, right? In the early days of this product, when we first started iterating with it in front of clients more than a year ago, it became very clear that unless you had proof, there was just nothing to say, right? Because they would ask me questions like, a very sensible question, well, how can you predict? How do you know? And you start talking about big data and models, and I was trying to use an analogy of the weather forecast and getting nowhere, absolutely nowhere, very quickly, right? So what we then did is we pivoted a little bit in terms of let's say the customer outreach process. We then invested in giving the whole model externally to an academic, a data scientist at a top university, and said, look, this is a model, we built it, this is what it does. Please just kick the tires of it for a month and run as many regressions or tests or whatever you need to do. And they came back, and the results are very positive. So that was one element of proof. Then what we've done since then is with other clients for that, we just ask for their data, their procurement data, particularly if they're an owner, and we run it through the model, and we give them, we do it externally again through another data scientist to say, look, we've run your numbers, here's the proof, right? So this all helps to make it better. And then another kind of a hidden obstacle has been the fact that I've been growing the trading business, and then we've been building the tech on the side. But because the trading business is kind of big in terms of numbers, at least the top line numbers, it can often take away my focus from building the tech and the things that I'm really passionate about. Because, if prices go up, prices go down, I need to think about liquidity and all of those really important things, which means that I can't have, a quiet afternoon with a tech team really building cool stuff. So that has been a genuine challenge, right? Just to sort of split personality requirement of doing that.
And I think that's kind of interesting, because it sounds like actually almost a positive problem to have, right? Because on the one hand, you're not just being tech forward, and hopefully on the one hand, you're not hoping that people will buy your product. In the sense, you have this other, the platform, which is the trading side of things. Talking a little bit about technology, what do you think the next big pivot is? Is everything going to run into agentic AI, and you're going to have a bot that will help buy or sell or procure bunkers in a way that is most advantageous? Is that really the next thing, or are we missing something there?
So if I apply, my thoughts around AI to this industry. I don't think a robotic single solution is going to be created to disrupt and replace buyers and sellers of fuel. I don't think that's going to happen, at least not for a while. What I think is going to happen, which is already happening with us, and we're quite fast to adopt this sort of thing, is that I think the next change we're going to see is companies in the sector leveraging AI to improve the operational leverage of their operations, right? The unit cost of operating whatever they're doing is going to either stay flat as they grow, or it's potentially going to go down, right? If they're prepared to reduce headcount and so on. So I think that's going to be the next big change. You're going to see companies becoming just a bit more efficient in the way that they work. The next change you're going to see, I feel, is companies caring a lot more about data, in particular the consumption of data. So I think until the birth of generative AI and the creation of different vibe coding tools and so on, I think there was a bit of a willful misunderstanding of SaaS companies, SaaS businesses in the sector, where a consumer of a SaaS product often didn't delineate between the SaaS and the data that it had within it, often. Okay. Now, and maybe not now, but very soon, I think you're going to see companies saying, we don't care so much about the SaaS, we just want the data, because our internal operations, to my previous point, are now more mature, more able to work with data, more able to make sense of it. So I think that's going to be the next change that we see, right? And I speak from first-hand experience here. Firstly, we are leveraging a lot of the frontier LLMs. We've built some nice agents that do things internally for us that just reduce the amount of time that people take to do things, which frees them up to do more valuable tasks. And we are really deep into that. We have also, on the client side, on the tech side, we have clients that are saying to us, Energy Beacon looks great, but I don't want to have yet another login for yet another platform. I want an API for data, which is fine, right? And that, I think, is a clear direction of travel. Those two things, based on the experience that we've had here.
It's funny you mentioned an API. When I was a product manager, I had a client, and I wasn't expecting this, kind of a nice mid-size company for the product that we were selling, calls me up one day and says, do you guys have an API? First of all, I was a little surprised. And then he said, this was before agentic AI. He said, no, I built something. I could get the data myself. I don't want to have to enter it into your platform. Now, the platform we had, we actually built, for a lack of a better term, an outbound API. So you put it in, and then we'll take that data and put it someplace else. We never thought about, for a lack of a better term, again, an inbound API. So my developer and I, we chatted about it. He said, it's all the same fields. We just kind of have to reverse engineer it a little bit. That's what we did. And they were perfectly happy with it. And again, they just they wanted it to flow smoothly into a platform that they were familiar with. So a little bit different than having another login, because they had another login, but it was just flowing smoothly. And like you said, it was an early example of efficiency gains, because what they didn't want to happen is that this data that was spit out, have to type it into our platform and, let's say, let's call it a half an hour a day, 2.5 hours a week. And you do that, you replicate that over a few different people for different processes. You could talk about 10, 12 hours a week. It could be a half of a person. Or maybe you're a big organization. You could do something and you not necessarily eliminate a role, but I was talking to somebody and they were saying, I don't think AI is going to eliminate anything. I think what will happen when somebody leaves, maybe we're a little slower to replace.
Yeah. No,
and we allow, and I think to your point, we allow the experts to expert, not to not to be data entry people.
I agree 100%. Shipergy, one thing we've done is we've taken the enterprise level of Claude, to name a specific AI, and I've given it to all of my non-commercial team, trained them how to use it, and it's been truly fascinating to see how this has evolved, right? Some people use it just to make better decisions because, they're just trying to figure out, they might have multiple documents and they're trying to figure out a way through it and they use that. Fantastic. I have other staff that have learned to vibe code with it and actually build things which help the company, which is amazing. In our finance department, so we use it to help manage our cash flow, to make really good cash flow projections going forward. So it's amazing. So these people have all become more productive, which is brilliant. There are some dangers though, because we need to, firstly, there's a distraction danger, which is something I cannot talk enough about, because it's incredibly distracting. Because if we have an internal Scrum meeting around, tech or product or operational things, we can go down ridiculous rabbit holes. We could build this, we could do that, right? Which I think speaks a little bit to the culture of the company, which is great. But you need to be so careful not to get distracted and focus on the things that you actually need to do. Second issues is that if you're building internal tools that solve genuine problems, great. But then very quickly you can end up in a situation where you have rows upon rows of undocumented code, and it could become a nightmare quite quickly. But I see these guys, these non-commercial people in the future becoming immensely powerful and just becoming like the orchestrators and the wranglers of AI to do all of the operations tasks, right? And I'm pretty clear that that's the vision that's actually going to come into fruition. I'm pretty certain about that. That's the way it's going to go.
Obviously, looking at AI, it's here, and just looking at what it could do in terms of vibe coding, which I've started to do a little bit around. And again, it gets into working on an idea and then saying, okay, is it worth kicking it to everybody? Is it worth creating a new subset of a product? Is it worth, like, maybe it's not good for me, but somebody in a different department, we are a 2,600 person company, could use something like this to look at shipping or to look at maritime or to look at AIS data, which we have. So there's a real interesting view there. And I think it's going to be additive, especially if you have a room full of SMEs, right? Because if you have people who are subject matter experts willing to embrace this, willing to kind of give up some of their core tasks that are really just redundancy, I think it's going to really move things in an interesting way. As we wrap up, you mentioned earlier, you said, for a 3-week stint a few years ago, you put your family on a plane and then you just traveled, and then you were on a plane yourself visiting clients, customers, potential customers. Don't know what your schedule is these days, or if you even have time. You mentioned having a family, which may limit this time. What are you reading these days? Are you reading anything interesting? Are you reading stuff about AI? Are you reading science fiction? What do you throw in your travel bag as you move about and visit clients? If anything, or you don't even bother, you just put on Love Island or something on Netflix and tune out, which is perfectly acceptable.
I can assure you, I do not watch Love Island. But no, I mean, I do read. I read, fiction, non-fiction. A lot of the things I've learnt in recent years about AI have, to be completely honest with you, come from YouTube and just iterating and experimenting. But to your question about books, the last book I read, which was a few months ago, was The Courage to be Disliked by a Japanese. It's like an interview between a Japanese philosopher and a student. And the title isn't as negative as it sounds, but it's all about separation of tasks and learning that you're responsible for your own decisions and your own work, but you're not responsible for managing other people's reactions to them, which in my role, and indeed any senior role where you have to make decisions which are sometimes unpopular, it's a good one to read and digest. So that was the last book to read on a plane, at least.
That sounds really interesting, and a very, I guess, the way that you have to approach things, because you're not going to be a people pleaser in the role, in any kind of management and leadership role. It's hard to be a people pleaser. And I know there are some folks who automatically default to that, which, believe it or not, my wife may argue with me, being the oldest firstborn son typically falls into that people pleasing role, because you want everybody to be, which is what I am, right? You want everybody to be happy and you want harmony. And in the leadership role, sometimes you just have to say, no, this is what we're doing, and move on with life. So yeah, it's a very interesting view.
Yeah,
I'm
the
sounding book.
I'm the youngest of 3, so I can relate to what you're saying. The sibling is as you described, but the youngest one, gets away with murder. So
yeah.
I can
I
completely.
wouldn't say murder, but my youngest definitely does get away, although she gets annoyed when she has to walk the dog and nobody else does. So So we still have those arguments in the Aversano household. Daniel Rose, thank you for coming on. Thank you for telling us about the journey of Shipergy. It's been fantastic conversation. I wish you the best of luck. I hope that top line number keeps going up or whatever measures you want to have. But
bottom line is more.
Yeah, the bottom line. But I hope that, you continue your success and find, continue to find your way in a very large bunkering industry. Thank you for coming on and sharing your story with us.
It's been my pleasure. Thank you for having me.